It's okay now. I got the thumbs up. Beautiful. Okay, and again, my name is Don Wilcox from Trade the News, and again, thank you for your patience. I'm going to be talking about the elements of trend trading, and I'm going to be, yes, I certainly will, and what I'm going to be doing is just looking at some various currency pairs and commodities and give you some ideas of how to use some of the studies and tools and techniques to identify a trend and stick with a trend. And one of the things I've noticed over time through traders is various time frames. People have different personalities when they trade, and what consists of a trend in their time frame may not be in the overall scheme that makes the papers or the publications at night. And we're just looking for time frames to correspond with your trading personality and techniques. And again, try to make this to a system type of decision making that takes away the psychological concerns of trading, where it's emotional to take a profit or willing to accept a loss that would is detrimental to your capital. So one of the things I'll go through here is just devising a very simple trend following system, and hopefully you can learn from my experiences over the years. And again, one of the most common topics of conversation is what is the trend, whether it be in the currencies, commodities, or even the equities. And you've heard the saying before that trend is your friend. The question is, how do you trade and stick with a trend for the maximum amount of profitability? And again, at some point in time, you'll be either willing to lock in a profit or take a loss that is counter to the actual trend, which is necessarily unfolds the way you want. So what I'll look at here is just devise some basic charts, and we'll start off with the currency pairs, looking at the euro. And here's a simple euro versus the US dollar, and we've seen that since last September into the current period now of April of 2000, we've seen basically a bullish euro trend, a bearish US dollar trend. If we move it to other currency pairs, you'd see perhaps the dollar is weaker throughout the period. And if we change the time frames, if we just break it down to, say, 4-hour charts, you notice that it's been a trend for the last 4 weeks, and then in mid-March it sort of turned into a sideways market. So again, the time frame is very critical in terms of defining your trend and your trading style. And again, one of the emotions is concentrating on time frames outside your trading personality and style, and reacting emotionally towards taking profits or taking losses. So again, it's very critical to define your trading style, define your parameters, and stick with them. And if we look at the euro chart here, I'll put in a study. One of the trend following studies that I enjoy, that I think is well developed, is the directional moving indicator. And I'll set that up right here. And basically it just doesn't tell you the direction of the trend, but it works in terms of the strength of the trend. And that ADX was developed by J. Wiles Wilder, and it's important with the DMI line, the ADX line, which is the green line here. You'll see that it moves up, consolidates, moves up again, and as it's increasing in value, it is defining a trend. And again, it doesn't say whether it's bullish or bearish. It just says that there is a trend in fact, and depending upon the reading of this DMI, indicates the strength of the trend. And what we have here is there's two lines, a positive line and a negative line. And the one that has a higher value will define the underlying trend in these DMI indicators. And I'll put a slide rule in here that shows the value. Down here you'll see, we'll work back in time, back in early part of March. You see a value of 27 down here and a 21 and 11, the 21 being the positive line and the 11 being the negative line. And what happens is you go with the higher number as the prevailing trend. That is, in this case, 21 versus 11, 21 being the positive, that's a bullish trend. And in this chart, it would be reading as a bullish euro trend. That would naturally infer a bearish dollar trend. But as you go back in time, you'll see that the ADX is declining in value in these bars. So what you're waiting for is, one, for the ADX to actually start moving positive, and you may do a period or two of confirmation. So as it moves, here it is back on February 26th at 3 a.m. Eastern Time. These are going in 4-hour intervals. It's finally having an uptick in the ADX value to 26, and the question is it a trend? And looking at the numbers, 32 versus 11, it's a bullish trend. Again, you're not going to get 100% of every move. That's one of the mistakes that traders make, is that they want to catch 100% of every move. The euro just coming from a 147.50 value in the last hours preceding to this signal break. It's now trading at 149.67. So one of the catalysts of a trader, the need for the trader, is, should I immediately execute or should I wait for the dip? And again, that's a question of leverage and your trading style. So just because you have a profitable signal, you can still, say, muck up the signal depending upon your entry or execution of a signal, or waiting for the confirmation. So if you do one period of confirmation, here we see this at 7 a.m. on February 26th. It's now ticked up in value. Is it a trend? And the way the ADX is under Wilder is anything over 20 suggests some momentum in the ADX, and that is the higher the number, the more probable that the trend is enduring. So sometimes these ADXs can go below into single digits, and sometimes they can go towards above 60. So the ideal range for the ADX, according to people like John Murphy, will be a reading between 20 and 40. So you sort of wait for an uptick with the 20 value and as a signal to enter a trade, and a 40 value or above to exit the trade. And again, like any other oscillator or any other study, there are periods of overreaching. That is, like I said, the value of the ADX can dip down below 10 and it can extend towards 60. So again, you have to refine your parameters in terms of how you enter the trade. But for the basic definition is, as the ADX moves up, then that gives the signal, and again, the strength of the signal will be determined if it's the ADX is above 20. It's, according to definition, a stronger signal than if it's in the teens. And again, if it gets above 40, it reaches what they call an oversold or overbought condition. So in this case, the reading of 26, again, looking at the two numbers, 32 and 11, it's a positive factor, so that's a bullish euro. And if you execute it right away on the first tick up, there'll be a value of 149.67 in the euro pair here. If you wait one extra hour, it is again increasing in terms of the ADX style, in the ADX number. The value is now 149.96 at the close of this. And again, depending upon your platform, there might be some slippage, or if there's a stop loss order, again, more slippage. But again, here at the second 4-hour period, a higher ADX reading of 29, supposedly saying it's a good signal. So you can wait this out until the ADX either flattens out or moves lower. So it takes a course of many bars here before it does flatten out. Again, it's over 40, so it might be oversold. And at this period, the market is sort of consolidating at the price level of 151.78. It's got the 151.79. So it's hitting some resistance here, at least for the time period, at the 152 level. And again, starting from the initial signal at 11 a.m. on this charting time, and it's going for various bars, and the reading, again, above 40 tends to suggest oversold. And again, you could tweak any indicator in terms of trailing stop loss or having a second indicator for exiting purposes. But if you go just towards the signal termination, which happens on March 2nd at 11 a.m., the closing rate in this case is 151.79. So perhaps a too big figure on this level, on this move. And again, for a while now, the ADX is just going to move lower And again, the market can continue a trend. It's not going to catch 100% of the trend or consolidate for an initial period of time. It takes a few days before the ADX, in this case on this hour chart, 4-hour chart, ticks up again to a level of 43. And the question, as you define your parameters, is, according to someone like John Murphy, a 43 tends to already be an extended reading for the ADX. And here you get a fresh signal. So again, based upon your personality or trading history, you may look at and say, do studies like how many times ADX signals above 40 result in a lasting trend. And again, adjust your positions and leverage accordingly. So in this case, as the ADX ticks back up at 43, the current market in this euro pair is 153.20. And again, it ticks higher the next period, and it continues for a bit longer. Again, it's over in the oversold portion of what they define as the ADX, but it finally ticks lower at 48 here back on a few days later, and the level is 153.57. Overall, it's not much of a trend trade in this case. It's more of a consolidating range market. But again, one of the things as a trader is whatever your style, whether it's trend trading or trading sideways market, is find something that you are accustomed to, can follow without emotions, and stick with it. There are going to be times when the ADX works wonder and it sticks with a trend. Other times the market's going to be consolidating, very choppy, and this indicator will not be as accurate or perhaps even less unprofitable. In terms of trends, not every trend, not every signal is going to work 100% of the time. For most trend following, people like Richard Dennis at C&D Commodities in Chicago, when he did the Turtle Traders, noted that you're going to be batting 3 to 4 winning trades for every 10 that you put on. So your batting percentage is 300 or 400. So you have 3 or 4 winning trades and corresponding with 6 or 7 losing trades. And it's riding those minority to riding the trend on those minorities in which you can recoup losses when the system does go sideways or not profitable, that recoups those losses and then returns the account to a positive return, so you can market to your clients and build up your customer base. So again, I'm just strictly looking at a very primitive ADX model here and just saying, if you devise the signal in terms of every time the ADX moves up, you're going to enter a trade, determine if all the positive or negative signs, bullish or bearish, and exiting, define your parameters. If it wait for the ADX signal to start declining, or devise a method in terms of a trailing stop, or maybe using a moving average or something else. But just looking at the ADX here, this is just a very simple to inspire you to go back and back test and see how this system works. And again, and you'll notice that you're not going to catch 100% of the move, even though the euro is trending here from the February 19th period all the way to March 16th. The ADX in this case was not trending the whole time. There was bouts of contraction on the signal itself, shorter spurts of a rising ADX, and again, a shorter spout of a declining ADX. So again, you will miss moves no matter what system you look at in terms of trend following or even sideways market. Not every signal is going to be a profitable one, and you're not going to be in the market 100% of the time. That's why you have signals for you to decide when to enter or exit a market. So food for thought. Easier said than done, because in any trading room, traders are sitting down and they certainly want to put something on and make money for themselves or for the firms. So they try to force themselves into a position. As we change time frames on this, I'll move to a different time frame. Again, looking at the hourly charts, again, just setting it up on the same parameters, you're going to have different trends. I'll just add a ADX. I gotta just change this a little bit here, so that they can fit in the screens here for the recording. And maybe we'll make it a point and figure so you can see the or candlestick, so you can see the time frame a little bit better. And look at a slide rule. Here's an hourly chart going back to the latter part of March, and we've seen the euro moving higher, but the ADX line moving lower here, 30, 29, 27. Under this case, you would not have a position on. You'd be sitting idly at the desk, at least in this currency pair, and waiting for the ADX in this case to finally move higher. And here on March 31st at 11 a.m., you're going to be having an uptick in the ADX. And again, this time it's going to be favoring the lower euro because the second number, the plus and minus, the plus sign is a 14, the minus sign is a 30, the minus sign is larger. So in the trend, the ADX says there is a trend. We're going to be playing the bearish side of the euro in this case. Or this is actually gold. I'm sorry, for gold in this case, you're going to be playing the bearish side of gold. And again, the entry level in this case is 923.50, give or take whatever your broker fills you at or the exchange you trade on. And again, next hour, the ADX continues to rise, 23. And again, under the definition, anything above 20 represents perhaps a stronger strength to the trend, in this case, a bearish gold market. And again, looking, there's a 25, there's a 27. So the ADX is getting stronger, but if you look at the gold price, it's still sort of just hovering in the 910 level, even though the ADX is saying there's a trend underway, a bearish trend in gold. It sometimes takes hours for the trend to actually gain momentum, even though the ADX in this case says there is a trend underway. If you look at the P&L, it seems to be a sideways market or not doing anything. And that's one of the caveats of trading. Here's a trend trading in several hours into the trend on an hourly chart, and it's just barely not making money. You know, not every move is going to be like the other day in gold where it moves $40 in the course of a trading session, not a trading day, but just one of the sessions. And again, when you're in it, watching it with your signals, here it is consolidating in a tight range. You might be eking into profit and then eking to break even, maybe a small loss. So as we move here, we actually see the ADX actually tick lower. It went from 33 to 32. And again, defining your parameters, saying, okay, I have to exit the trade. And again, it's at 917. So where this one initially started was at 923. You're on it for many hours, and then it turns negative at 917. You made a little bit of money. It was a lot of hours of frustrating, again, just in this one pair. And if you wait a couple hours, again, there's a new signal on April 1st. This is looking at yesterday, and the price is 911.97 in the cash market. And again, one of the tougher things for traders to do is, I was short gold before at 923. I took profit at 917. Here's the next day. Here's the ADX rising above 20. This time it's a 30 signal. It's above 20. It's not above 40. It's telling me to go short gold again. Now the emotions take over. It's telling me that the price right now is just around $912 per ounce in the cash market. Now, you can't think saying, oh, I was short at 923, I covered at 917. One of the flaws of traders who divert from trading systems is not following every signal and then saying, what I'll do here is I'll fade the move. I'll put an order in at 915 or 917. I'll get back at the price I last exited. And that's not what system trading is all about, particularly in trend trading. Is you're not going to catch 100% of the trend, and that's something that's just got to be hammered into you. If you trade by a system, you got to follow your system. And here at this hourly, you're going to have to short gold again at $911 and change, even though it's $5 less than your prior position a day earlier. And next hour, if you wait, it's now 907, and if you don't, again, going to you might have additional rules for confirmation. So now here it is 907.30 in the cash market. You might have confirmation. Do I sell gold in this case? And if you do, the next hour it trades down to 894. It consolidates for a couple hours and still moving up to above 40, which is the oversold, extended move, in this case oversold. The question is, how do I formulate an exit strategy for this position? Again, trailing stops or whatever it is, moving average, something else that corresponds with this. But again, even though as this ADX moves to 50, it hits its session low here in spot gold of 877.40 in the cash market. But if you're not going to get 100% of the move, in hindsight, you're going to say, oh, that was the absolute low. So what happens is the signal in this case remains overextended, but it's continued to rise. So again, tweaking your system is coming up with a set of rules to say, when do you exit? If you wait for this ADX to flatten out, the closing price in gold is 885.30. It's a profitable trade, but it wasn't the absolute stone low seen at 10 o'clock during the 10 o'clock hour back on yesterday. So again, using a study and defining your rules, whatever those rules may be, is you got to stick with it. You can't have hesitation. And again, you might have you can tweak it around in terms of leverage. If a signal comes in, I'll do so many lots or such an amount. If it goes against me a certain amount, I'll add to the position with a defined preset loss limit. You can tweak your system like that. But again, the initial signal, if you're using a signal-based system, you got to stick with your signals no matter what. In some instances, or trade the news here, there's going to be a big economic report or a big central banker speech, say Fed's Bernanke or something, the next hour when you get a trading signal. So the question is, do you follow the trading signal an hour or a day before a major data release like U.S. payrolls or Japan Tenkan or Fed's Bernanke speech of some sort or Trichet? So again, you can't mix apples with oranges. It's either a system-based trade or you're a fundamental news type of trader. Right? There are hybrids, but what you can do is adjust the leverage to something like this. I'll follow the signal, but rather than going 100% all gun blazing, I'll trade the signal and put a small position on, so you can ante up the leverage factor. Have a minimum for all signals. If there is news, then at least you're in the position, and you get through the major news event of whatever it's economic or political. And again, there's elections or whatever. So there's always something. You can always find an excuse not to trade, or there's always some sort of fear factor out there where you're scared to put on a position. So again, the whole purpose of defining rules is to follow the rules, and rules are rules. You just cannot start tweaking the rules or tweaking the indicators once you have a mindset formulated. Again, one of the mistakes that, again, trend followers will be fine, or even sideways traders, is that ADX worked well for, say, early part of late March, early April. All of a sudden it goes cold. I'm going to switch over to MACD. I'm going to switch over to moving average crossovers, another trend following technique. The question is, as you're always searching for that holy grail of trading, yes, the ADX was cold for that period of time, but while you're searching, playing around with a MACD or something else, all of a sudden that ADX might turn back into a profitable system trade. And again, you might pick MACD, looks hot while you're looking at it, and as soon as you switch over, the kiss of death occurs. That MACD now goes sideways. So over a period of time, no matter what you pick, there will be a winning system ensuing and a losing streak at one point. And again, that's no matter in my career, anything you've seen, you go back and back test it. And again, it's all about the probability. With ADX, I probably bat 300, 400, 4 times out of 10. But again, it's riding those winners that make this, a feasible way to perhaps trade. So again, just looking at that. And again, once in the last few hours, we're seeing the ADX consolidate right up to the present time. There is no signal on the hourly gold for ADX, and it's still weighted to the downside in this case. So that's just looking at a commodity. And again, we can change the time frame. If we look at a daily gold chart, gold's had a nice up run since January. And looking at the ADX on this one, I'll just go back, sort of consolidating. It's at a very low number. And here it is. You can see gold move up again in hindsight. The ADX is moving higher. And again, going by the definition, 20 is like the level of the ADX reading that confirms a strong trend. Again, you can tweak it higher or lower number. But again, here, rather than getting in with the ADX first turned on December 26th at a price of 823, depending on your parameters, you may wait till January 3rd at a price of 864. And again, it does continue for some time. It's above that 40 level, and by the time the ADX turns over, gold's at 883. You didn't catch the high. Again, you're not going to catch 100% of the move, but somewhere in here on this move from December 27th to January 18th, you could have either a second filter or some sort of confirmation to your initial signal as to take profits, or confirmation that a signal is actually at an end. So again, during this time here, it's a relatively long period of time. So from pre-New Year's to mid-January, you have one position on a gold. So again, you'd be showing up every day at the office and just either counting your money or just watching some profits erode. But again, the point is, if it's trend following on this daily chart, there's a lot of days where you just come in and maybe do some other stuff, bookwork, or again, there'd be other pairs that you may be trading depending on how much is in your account and your leverage. But that's just just to give you an idea. I follow 12 currency pairs, a couple commodities, a couple of the major indices. And once in a while, you'll see all these signals kick in at one time. In order to play each signal and have a systematic approach, you need the right amount of margin, the right amount of risk management. So again, if you're playing multiple markets using the same trading signal, you have to, again, approach it in a systematic way and say, okay, I have a rule-based system that allows me to get into positions, define risks or the stop losses, predefined stop loss, some sort of profit, take profit rule. And again, you have to account, if you're following 5 markets, suppose you have 5 winning signals at one time. What's that in terms of margin, maintenance margin? And what if some positions are profitable, some positions are not profitable? What if they're all losing at one time? I've had times where ADX and everything I watch is absolutely a wash, whether it be in currencies, commodities, or equities. It just doesn't work. So that's a big drain on the capital account if the majority of your signals are losses, and particularly in high volatility where you're not just getting losses, say in currencies of 30 pips, it might be 3 big figures. You have to account for that and have rules that account for the volatility. Certainly volatility has increased over the last year, as many central bankers have warned, and now it's here, and it might be wreaking havoc on some of the fixed income and feeding over into other markets. We saw the carry trade unwind last summer. But again, your system, whatever you devise, should account for different scenarios. Again, having a trend following system with stops too close based upon the time parameter will not allow you to reach full fruition of any signal. So again, one of the things is, even in this one here in ADX, dependent upon the parameters, when the ADX starts moving higher, and in this case it's a bullish gold market, depending upon your confirmation, you're not going to catch the very bottom, which was back on, in this case, December 17th. Signals started moving positive in the later part of the month. And again, even when it turns negative, you're not going to catch the absolute top. So again, most traders I talk to, particularly retail traders, is I got to catch 100% of the move. And when they get a signal, they try to fade the entry criteria just because they can't accept that where the signal is now being elected is not where the best level was in the periods preceding the signal. So again, it's human nature. I want to sell the high and buy the low. The signal is not going to be, catch extremes. My stops seem to be at the extremes, but in terms of some signals themselves, it's a rarity. But someone's got to pay the top and someone's got to pay the bottom. Just hope it's not a stop loss order that exits the position. And taking a look at, again, when you develop a signal, you want to be selective. find a system that fits your personality. And I'm of the breed that keep it simple. More simplicity breeds elegance in the systems. If you have too many parameters, it might be um, always there's always going to be doubt out there in terms of a decision making. You know, there's no 100% guarantee that that trade's going to be a winner or that trade's going to be a loser. Uh, there's a guarantee that there will be some emotional pain initially in the period. I tend to find that no matter what system I followed in the past, that in the end, it's easy to look back in hindsight and say, wow, that was a great trade. If I was unwinding carry trades last summer or long gold over the latter course of last year. But in the initial period when the signal was first elected, whether it's a 1 minute trade, an hourly trade, or a daily trade, that initial period where there is uncertainty and initial profitability, maybe initial losses endured in the account, test the nerves of any traders. Either you stick with the system or you let the emotions overtake you. But in the end, I've had the same feeling in my stomach on every position that's been elected by a signal, whether it ends up to be a numerous big figure winner in the currencies or a nice commodity trade or a big loser where I get stopped out. It's always been the same feeling in the stomach. And again, the whole purpose of signals is to somehow confirm the psychology that, yeah, this trade's painful, but the next one will be profitable, or at least follow an organized method where over the long run you prove profitable. It may not be 100% returns. It may be a positive return. That's what you're seeking. Will it be enough to make a living? I don't know. But again, it's better to have some sort of capital appreciation. You may not beat the deposit rates at the local banks that are very low at this time, but you don't want to see a drawdown in the account. And again, like I said, the feeling, whether it's been a long-term winner or a short-term loser, it's always been the same in my stomach. It's just reliability of the system that gives you the confidence that over the long run, the account balances will increase. So spread the wealth. I'll take a look if anyone wants to take a look at different commodities or time frames. Again, this is just demonstrating the ADX, which is, like I said, one of the trend following devices. We can add some moving averages, and like I said, you can find something that's used as your main tide in the trade, and then add something as a filter factor. Usually when markets tend to trend, moving averages tend to provide some initial support or support as it moves along. So that's a MACD. I'll remove the MACD. It depends on the moving averages. Again, whether it's a currency pairs have different personalities. And so different moving averages tend to have a better configuration for certain currency pairs. In terms of moving over crossovers, some of the interbank traders used to talk to doing dollar Canada, they liked a 5-minute, 9-minute crossover on shorter term charts for signals in dollar Canada. If I applied that to the old Deutsche mark, it probably didn't work as well. But again, it's defining a system and sticking with it. And again, it takes time to develop. If we just do a 30-period average in this case, you could just note here on the simple ADX and the gold, as it starts turning higher, says, it looks like to be a trend in gold here in the later part of December. And again, hindsight's 2020. If you move it higher, somewhere in this period here in early January, you get confirmation that perhaps the gold market's moving higher. The moving average is a little bit lower from where the market's actually trading. So use this either as a trailing stop or initial stop or something. You can, again, use a second study or an indicator as confirmation or a trailing stop. And again, over time, as the ADX does go neutral, it sort of tests the moving average here. So again, if your primary signal is the ADX, you're going to be exiting the trade. if your primary signal is I'll be long above the 30-day moving average, short below it, you stick in it for a little bit longer period of time. But when moving averages get choppy, they can certainly chop for many months or quarters at a time, particularly on a daily basis. So, but over the last quarter, 30-day moving averages worked very well, particularly the test back in late January and early mid-February. Only recently did we see the gold break through the 30-day moving average. And again, all of a sudden, it worked well, support for the first quarter, but again, now it's working as resistance. And again, the point being that as you have a primary trend indicator, you may want to use something else, either for trailing stops or confirmation of where to put the stop, or as the trend gets older, where are you going to put the trailing stop. You might want to do a moving average crossover. So again, one of the things is you can't change personalities. Like if you're a moving average trader, that's fine. You're going to be in this trade longer than the ADX in this case. And again, as we look over time, we'll see where the ADX has entered a very choppy period, and so has the moving average. And again, keep in mind that even though most people think there's a bullish and bearish trend, there's also the neutral trend or consolidation. And so the moving average in this case, I just picked the 30-day moving average on this chart, 30 period. It's a daily chart, and it just happened to work. Of course, in hindsight, it looks like it's working very well. And that's the spot gold market. If I break down the time period to an hourly, it might be a different story for that same time period. It's sort of been kind of choppy in the later part of March. It held, and now it looks like it's back in a choppy range. So again, whether you use a system or moving average, it's what's your time frame, and what you can't be doing is here's the hourly. I'm working the hourly ADX and moving averages or crossovers or whatever, and then take a look at the longer period of time and say, gee, I should have stuck with the 4-hour chart. Because when you have a single account and you're looking at multiple time frames, you're going to have bipolar decisions, bipolar personality in your trading account. Are you a medium-term trend trader? Are you a long-term trend trader? Are you a short-term trend trader? What I find to do is I basically have recommend 3 accounts, one for the longer term, one for the shorter term, medium term, and the shorter term. And again, there'll be times when the accounts are using the same indices, whether you're using ADX on a daily basis is in the bullish mode, but the ADX on a shorter time frame, say 4 hours or hourly mode, is in a bearish mode. So your accounts, one account may be gaining capital, and another account is losing capital with the same studies in different time periods. And again, if you set something up, you got to follow it religiously. You can't mix apples with oranges. ADX, if you're a daily ADX trader, stick with a daily ADX. You can't be fine-tuning with an hourly ADX in the same capital account for your trading decisions. You're going to have a bipolar personality, and sometimes you'll say, gee, the shorter term saved me money. It went bearish before the longer term. But again, the overall scheme of things, when you go back a week or two, the overall trend might be prevailing in the longer term. So if you, for example, in gold on the run up from 550 to 1,000, the longer term ADX might have kept you in there longer, but there's many spurts of quick sell-off in commodities where it would have gotten you out of the longer term trend because you're all of a sudden switching the trading personalities to a shorter time frame. So again, consistency. If you're using multiple time frames for your decisions, come up with a manner in which it encompasses those time frames. Or if you have enough capital, again, capital is always a problem. Capital for a longer term trend following, capital for a shorter term trend following. And if you need boredom there, some of these trend followings are just trending. You may need a third account just for killing the time and back testing other personalities. And we're going to be wrapping this up in just a few moments. But again, hopefully try to convey to the audience here today that looking at trends, picking one study, and even within the study, even with different time frames, you'll have bipolar personalities, and you're not going to catch 100% of the move. And I find that something like the ADX works very well in very liquid instruments. That's why it's one of my favorites for commodities. Some of the commodities such as or spot commodities, gold and crude oil. With futures, you have the problems with rolling months, where all of a sudden the ADX is taking up the price factors of the front month contract, and it rolls to the next trading contract, and that could screw up the back history. So sometimes these, like I said, you got to understand the element of the instrument that you're trading and how the system impacts it. With a lot of the futures, the front month change, the swap out of the front month to the next month has a lot of implications for the studies. And it's easy to go back on paper and say, oh, this study worked great. But in the overall actuality of it, as you are there in the period where there's the swap out of the front month to the next month, all of a sudden your studies are going to be jumping over to the next month, and that might have different calculations as you go back in time. So something to think about. And the cash currencies, I find that it's more orderly transition. There is no front month. It just moves day to day, so it's a more consistent basis for something like that. And a lot of things I find in some of the individual stocks, system terms like this, like the system may turn bullish or bearish, but if it's a stock that only has not 24-hour access, it can gap on the New York Open, gap higher, gap lower, and the trend following technique is correct, but all of a sudden you got this huge gap that might exceed the initial life of the signal. So some problems. So bottom line is you got to, again, find the instrument that you're trading and find the personality of a trend following device. Keep it with if it's a futures contract, see what it's like in terms of the months. Again, I like cash currencies and cash metals because of the less implications with the months rolling over and keeping a continuity in the studies that you're watching. So if you have any questions, again, my name's Don Wilcox. I'm at Trade the News. You're more than welcome to test our software for a week, free week, to see what we are all about. And any questions, feel free to contact the TTN staff. It's tradethenews.com. And again, I'll be doing another presentation in a later date, and I'll expand upon the trends here, the trend following techniques, and again, answer any questions that the audience might have. Again, just to wrap it up, you got to find a methodology, find a method to trade, find the exact trade, set the parameters to enter and exit, and again, find something that defines your trading personality. And again, just note the difference between trend following devices and oscillators, which tend to work in a consolidating market. So there's a lot of studies to choose from and a lot of different personalities of traders out there. And again, even though there are studies out there, there are studies that you can tweak, and the ones that are standard with the charting packages can be tweaked. And again, look at the history of it and see something reasonable, and again, set reasonable risk parameters. So thank you very much.